XRP has obviously made a ton of noise this cycle. It's the number 3 largest cryptocurrency project by market cap right now. And if we're thinking about how successful XRP has been over the years, we could just take a quick look at the chart. Now, I don't think XRP is done. I think XRP continues to run this cycle. And I think that we are going much higher as well in the short term. But on top of that, let's think about the long term here. Let's think about the rich list. Let's think about where we all stand on that rich list. Now, a few people have an idea of where exactly they stand, I'm sure. But just looking at XRP today, this is an altcoin that has essentially priced out majority of retail from owning a very large amount. Owning 10,000 XRP today, it's not easy for the average investor to get a hold of 10,000 XRP. If we go back just, a couple years ago, let's just go back a year ago, it was a lot easier, right? But today, XRP really has priced out retail in a big way from owning large amounts of it. Which takes us back to the rich list, right? Like, where do we all stand on that rich list? Well, in this video, I'm going to go over a few things because we talked about it in, a previous video as well. So we do have something to go off of and just kind of look at how things have changed just from that video to now. But first, let's start off with this video clip here that Digital Asset Investor did quote, and he said, XRP yield is coming. Same logic will apply. Limited supply, burn mechanism, and yield. Lock in. Because this is Tom Lee. Now, Tom Lee is explaining how $6.6 billion in Ethereum generates over $200 million in net income. If you hold Ethereum and you agree to stake it and validate transactions, you earn the staking fee, which is 3%. He plans to use the income to pay Bitmine holders a cash dividend. Now, what's crazy about this is we think about what passive income can do for these assets. The supply locked up, the supply diminishing over time. Also, the burn rate. Then we combine that with the demand. The demand rising, the supply dropping, which equates to what? The value of the underlying asset going up drastically. This is the same exact game for XRP as well. Digital Asset Investor is explaining this perfectly because yes, yield is coming for XRP. And the same logic will apply. But the difference here is that XRP has a limited supply. Ethereum, however, does not. So if we're thinking about this, XRP is technically a better investment for the long term because we're not going to see any more XRP created. But what we will see is XRP locked up. We're going to see a lot more XRP accumulated and hoarded by big players. The supply will start to dry up. And right now, to be in the top 1% for retail, it's almost unheard of, which we'll talk about. But listen closely to what Tom Lee is saying here.
Ethereum pays a 3% native yield if you stake it. So the 6.6 billion held of Ethereum is over $200 million in net income right now. The day we turn on staking, not only is there no debt on Bitminer, it's going to pay you $200 million a year in dividends.
And what do you do with that? Buy more Ether?
Or we might just pay it out as cash dividends.
Where does that 3% native yield come from? Is that gas fees that
yes,
users are paying to use ETH?
Well, it's called proof of stake. So Ethereum doesn't have a proof of work model where you're competing for a block reward. It's saying if you hold ETH and you agree to stake it and validate transactions, you earn the staking fee, which is 3%.
Okay. So that's where that's coming from.
Ethereum pays a 3% native.
So, yeah, I mean, listen, when we think about this idea, I feel like, again, it's very easy to just look at Ethereum and say, oh, yeah, this is great for Ethereum, but completely overlook what's happening around XRP. Again, let's just look at real quick the document that I made. Now, I forgot what the date was when I made this video regarding the 1% XRP. I don't think that it was that long ago because, again, if we're looking at the value here, $8,252 for, $2,552. Again, that would have taken you into the 10% bracket. I think that this is pretty new. I want to say just over a couple months old. But looking at these amounts to get into the 10%, the 5%, the 4%, 3%, 2%, 1%, and even the 0.5%, let's take a quick look at this, right? Compared to the rich list. Now, a lot of people will go over onto like xrpscan.com to look at the rich list, and we could see like, some of these numbers here. However, it doesn't really give us a breakdown of like what the top 1% is or anything like that. This is just so much the XRP distribution. But the rich list itself does calculate it from the data that's pulled from the XRP scan website. And just taking a quick look at this real quick, let me just, zoom in because I want you guys to see this. On the bottom left side, and I guess maybe it would just be better for me to zoom in real quick. And 1 second, let me pull this up. All right, so I wanted to give you guys a little bit of a better image to go off of. Now, I know that you can't see the 10% down there. However, to get into the 10%, it would be 2,400 XRP. Again, the 10% here was about 2552. So it's kind of dropped a bit going off of the top 10%. However, if we're looking at the other percentages, like the top 5%, right? 8,395. The top 5% here, 9,561. So that one actually dropped off a bit. And then in terms of the top 4%, 10,709, top 4% also dropped a bit. Top 3%, 15,693, 18,065. So this one also dropped a bit. Top 2%, 25,010. Again, going off of this, 28,716. Top 1%, 55,309. Top 1%, 50,030. So almost all of these numbers have dropped off a bit in terms of the amount of XRP being held. Now, how accurate is this? We don't know how accurate this list actually is. However, think about what the value of XRP is to just get into that top 1%, right? 50,030. Let's just go and look at XRP real quick. 50,030 would run you $151,000, almost $152,000. Let me ask you guys this. How many of you can just go and load up a Coinbase wallet with $152,000 and buy up 50,000 XRP? I'm pretty sure that there's not a lot of you out there. And the reason why I say this is because, again, to get into the top 1% at this point, it's almost unheard of for the average investor. Even 25,000 XRP to get into the top 2%. Again, 25,000 XRP would run you almost $76,000. And if you think that's bad, look at some of these other percentages. Even the 10,000, right? Even the top 4%, 10,709. 10,709 would run you almost $33,000. Again, a number that is not easy to come by to drop on XRP. But guess what? These numbers over time will change. I know that going off of what I created just a couple months ago compared to what we see here, yeah, some of these numbers have dropped in terms of the amount of XRP, but these fluctuate all the time. However, they do stay around almost the same range. If we come back to this in a couple months, I guarantee you that these numbers will actually increase. But over time, they will continue to increase. The reason why is because we now have ETFs on the table, right? The case is wrapped up. ETFs are now on the table. The second that these ETFs get approved, they are spot-based XRP ETFs, which does impact XRP in a big way, which changes how much demand for XRP there will be as well. A large amount of XRP will start to be held through these ETF issuers, eating up more of the supply. Then we think about all of the companies that have treasuries set up for XRP, and now we have XRP being targeted from 3 outlets, right? We have retail buying up XRP. That's a big one. Then we also have retail buying up XRP through institutional applications like the ETFs. So now we have 2 avenues eating up XRP supply. Then we have the companies also tapping into XRP through treasury operations. 3 avenues of major demand for XRP. And we didn't even get to Ripple-based products where XRP is locked up in specific, things like, for example, DeFi protocols. We didn't even talk about retail locking up large portions of XRP for DeFi yield. Like, if we're thinking about what's happening here around the ETFs, which, by the way, there's a ton of ETF applications, all of these companies as well, the amount of XRP out there on exchanges will start to dwindle over time. No, it's not going to happen overnight. No, it's not going to happen, in the next month or so. But I do think that the supply of XRP being limited, and I know that there's almost 100 billion out there. I know that it's not like a crazy limitation. I still think that over time, that amount of XRP will drastically drop. And this is through demand of XRP, through adoption of XRP, the burn mechanism as well. But also think about, what's happening at this point for XRP. Think about the market opportunity for XRP, especially with the case wrapping up. I think that Jake Claver did put out a great post regarding this. He said that it's clear XRP is at the point where institutional money, mass adoption, and real-world utility meet. The community stayed strong through the challenges. Now big players are moving in. Here are 3 key points shaping XRP's future. Number 1, institutional interest. When large financial players show interest, adoption tends to follow. XRP's speed, scale, and low cost make it ideal for cross-border payments at size. Tokenization. It's growing fast and could explode as regulations unlock trillions in digital asset value. The XRP ledger is already partnered, integrated through Ripple payments, and battle tested. Stablecoins. Ripple's RLUSD has New York Department of Financial Services approval and MiCA compliance, ready for institutional use. With Axeler and Wormhole adding interoperability, the XRP ledger can connect to more assets and dapps, boosting its network effect. XRP is positioned at the crossroads of tokenization, cross-border payments, and stablecoins. 3 massive markets. Picture a near future where stocks, real estate, and digital money trade instantly without middlemen. The XRP ledger is built to be a premium solution for exactly that. And the crazy thing about this is, think about how much XRP will be needed for all of these types of use cases. Again, right now, we're just going off of retail buying and selling demand. But think about once we start to see these real world use cases kicking up, scaling, and becoming a reality on the XRP ledger. XRP and its demand will start to drastically rise. This will affect the amount of XRP out there. This will affect the value of XRP as well. This will also price retail out more and more and more. Believe it or not, and I know that a lot of people will say, oh no, this is clickbait, retail's not priced out. Retail is 100% priced out in a large way from owning a large portion of XRP already. Retail is not going to own 100,000 XRP today. They're not going to own 50,000 XRP today. They're not going to own 25,000 XRP today. This number is starting to become more and more expensive for the average investor, and it's almost at that point where it's unfathomable for most individuals to hold, 10,000 plus XRP. And this is only going to get worse over time. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out, guys.